Hey everyone, I'm Charting Man Dan with the Chart Guys. If yesterday we're smoking bongs, today we're scraping the resin out of the bowls, giving back the majority of the move. Big time pullback. We're going to talk about the lessons learned, some of the red flags that stood out, what happened, and what we're looking at from here going forward. A little bit of therapy chat. So we have to laugh at ourselves if we can't laugh at ourselves. And I know many of you are beyond that point in this sector, but we won't stay sane and we won't stay in this game. And that's the only way that we can stay in this game. And so before I get into, lessons that I learned, red flags that stood out with the price action and things that were going on, I want to talk a bit bigger picture here. And, obviously you all know at this point, if you're watching my videos, I'm constantly talking about taking profit into momentum. I don't care if I leave money on the table because I view this as a very fleeting game of profits, especially this sector. And again, I'm in it for just give me my little piece of the pie. And so today's move caught me off guard without a doubt, both myself and people who've been trading this sector with me 3, 4, 5, 6 years. Was a bit surprising. So what happened? Why did we sell off so hard across the board? So number one, we ran really hard, obviously. CGC up 80%. Okay, what I expected was a little bit of morning strength. Even if it wasn't a gap up, I would have expected the people that missed the headline in the afternoon, the 3 hours that we traded in the afternoon, if you didn't get it, you're acting this morning and, trying to grab a position. So I anticipated, I was talking about taking profit. I was going to be selling the gap up open, taking profit into hourly consolidation. I took some profit yesterday into the end of the day on my CGC calls and things like that. But still, the magnitude of the drop was surprising. The drop itself was not surprising. As far as the bigger picture, why are we dropping on this headline? Let's think of it this way. Let's go back to Constellation and CGC, that headline. What was it, 2018? I forget. But that headline was brand new, no rumors about it, new information, concrete, it's done, it's in the past. Constellation has invested in CGC, $2 billion or whatever it was, and the market says, wow, and has to now price in this new information that is concrete and has already happened. What happened with this setup is we got the dangling carrot approach, and we knew it was coming, right? We had, a 90% chance that the DEA was going to reschedule cannabis with everything that we've been hearing. What we didn't know is when. Is it going to be April, May, June? We don't know. So what has happened now is we've got the answer. Okay, that 90% chance is true, but think about the market as a conscious being that is always forward-looking. You've heard that before. The market is forward-looking. As soon as that headline drops, now what? Now what? We have to wait for the DEA to make an official announcement, maybe in a couple of weeks. We got to wait 60 days for a comment period. I mean, we're looking months down the line, maybe September, before anything actually changes. This is still, nothing has officially changed. Yeah, we're closer to it happening. And that's the aspect of this sector being so reliant on the political process that everything gets priced in way before it actually plays out. Now, I'm saying the headline is priced in. I'm not saying that cannabis being Schedule 3 is priced in. If you want to zoom out 5 years, that's fine. That's not the game I'm playing. That's not how I make money in markets. Maybe you do. That's great. I hope it works out. But for me, the headline was priced in after 3 hours of trading yesterday. I didn't think it would be. I thought the amount of attention the headline was getting circulating around CNBC would have gotten a bit more follow through. But it makes, obviously in hindsight, it's much easier, but it makes sense that we didn't get a ton of follow through. It just stopped faster than I thought it would. Honestly, I thought we'd have a little bit of morning strength. I think I already said this, little bit of morning strength into a 15% plus pullback, especially on CGC that ran so hard. So there were some red flags on things that stood out. The first is, pre-market and after hours, CGC made a couple attempts at this resistance and looked good multiple times. Even last night, this morning, looks like we could get this gap up open. Even here, trading at 8 a.m., we were up over 15. Looks like a potential gap up open is coming. And we have this clear resistance wall. Need to watch that if we ever get back to these price levels. But the red flag started coming in. MSOS gave me a red flag yesterday, and I'll talk about that in just a moment. But with the price action red flags for CGC, because again, we're looking for oversold conditions to buy this bounce. The first red flag, when you're looking at a trading setup, you want a confluence of signals. You want the stars to align with as many things as possible. You got this ideal setup. This indicator is doing this. You got this support level doing this. You've got, the right news catalyst, whatever it is, aligning. And we know you want to know what your ideal scenario is so that when things start to stray from ideal, it tells you to take a step back and don't be as aggressive. And the first red flag was hitting 5-minute oversold conditions in pre-market. We sold off as we headed into the open. It became clear we were not going to gap up open. I played a little bounce here pre-market, sell partial, risk-free stop under the low. Bell rings, I stop out instantly. Okay, now we're pulling back and hitting 5-minute oversold conditions in regular trading hours. Now hitting pre-market isn't enough for me to say the setup is gone. And not gapping up is not enough for me to say I'm not playing a bounce. It's enough for me to say this is not ideal. We didn't break the high of yesterday, and so I know hourly consolidation is coming first thing. It's not, do we push up first and then consolidate? If you don't break the high of yesterday, hourly consolidation is coming first thing. And then the major red flag from there was this 5-minute bear flag confirming. If this was going to see continuation, we would have marked an hourly high or low, we would have seen 50% plus bounce retracement, and we would have regained a short-term uptrend, showing that an initial wave of selling took place, the buyers stepped in, they bought the dip, and they're back in control. As soon as you 5-minute bear flag and hit a new low of the day, red flag. I mean, the red flags are coming. Look at how quickly this red flag stood out. I'm going to do some screenshots here. So first off, this was someone, private messages talking about FOMO and they want a position. And my mind, trying to calm the FOMO is keep in mind this move is not just starting, which is why I've been in a swing position of MSOS and TCNNF for months. CGC is up 500% in the last 6 weeks. That's my anti-FOMO pill of just, oh yeah, this move is not just, I really have a pet peeve when people say the move is just starting when names are up hundreds of percent. Crypto people do it all the time. Cannabis people do it all the time. No, if you're up 100%, the move is not just starting. But anyways, red flags. It took 1 minute, it took 103 seconds to have red flags on the day. There were red flags on the magnitude of pullbacks. Stay protective with stops. So in 1 minute candle, 2 1-minute candles, able to say, hey, everybody just, don't go too aggressive. It was the break of the pre-market low, and it was the hard drop. Then, of course, confirming that 1-minute bear flag just increased that red flag much more significantly. I did attempt a bounce play here on CGC and stopped out. And then, reiterated another red flag, and I was done. There are too many red flags. I'm not going to keep trying here. So reiterating all the major red flags 23 minutes into the day, will bounce eventually, but tons of space for lower highs. Bears have now proven a big enough pullback that we're going to scout lower highs to be the result of this bounce. Remember MSOS back on its couple weeks ago, its red flag day, where you get that big dump day, and I was selling on that 4-hour bounce as a second chance. When you have that magnitude of a drop on the morning, you know that lower high is coming because that's the bull's second chance to get out. That's the bear's second chance to grab a position. And we didn't even get a bounce. We didn't even get an hourly bounce. We got just little dinky bounces on the way down. Referring to MSOS and its holdings, we did get an hourly bounce on CGC. We'll look at that in just a moment. Again, another red flag. Last night, I talked about how MSOS was not trading ideally, and I needed to see what the inflows were. And again, it was just the sideways trading. And, if you tell me, yeah, there's 5 million shares of inflows created, the ETF was selling shares, but now we've got $10 million of cash. We're going to buy the underlying holdings. I say, okay, that makes sense. Not ideal, stifling the price, but likely to see some continued upside. When I saw that there was only 1 million shares of inflow and we got no cash in the ETF, that to me says, okay, it's not the ETF selling. Someone was selling tens of millions of dollars of MSOS between 1070 and 1110 yesterday. That's a condensed range. It's a broader range. Tens of millions of dollars. Now, I made this tweet, again, just another red flag. So 8:30 a.m., keeping it real, I do not like how MSOS traded yesterday afternoon. It traded sideways. Clearly tens of millions of dollars were being sold. By who? I don't care. That's just what was happening. Now we know in hindsight that's smart money. Smart money was selling the news in a very significant way to keep that price that contained. Just 1 million shares of inflows was keeping it contained. I wish there were more red flags. For me, I then saw that and said, all right, red flags. But then I said, that's just MSOS. There's always red flags there. CGC looks great. There are no red flags here. And if there were more red flags, if CGC was doing similar kind of price action, then perhaps I would have been a little bit more prepared for the magnitude of the dump. So in the end, what happens? Just giving back a lot of the, one of my best trading days yesterday, giving back a big chunk of it. I'm really good at taking profit in this sector. It's what's made me stand the test of time over the last 13 years trading this sector. And again, just no emotional attachment. Give me my profit. Give me my piece of the pie. See you later. I'll get back in when the setup is good for me. And I did a bad job of taking profit this morning. Essentially, rather than, I thought I was going to be able to take profit into morning strength. Instead, I had to take profit and sell positions into weakness, which means giving back a lot of that move down. Like I said, I took a bunch of profit on the CGC calls because they were expiring Friday. That was a good thing, but not as aggressive on the initial pullback, taking profit because, again, anticipating the hourly higher low is the most likely scenario. And it was, we just didn't anticipate the 80% retracement, whatever it was, before an hourly bounce got going. So now what? Let's look forward. So from here, you're just going to see so many more and more people capitulate from this sector. And, that's just the way that it goes. Because, okay, now we don't have this. What? I'm going to hold for 8 months of summer drawdown, 6 months, 4 months, whatever, of summer slow bleed and just do this all over again? This was supposed to give us the green light. This was supposed to be the savior. And it's not. And so just be prepared for significant pessimism in this sector. As I've said, I'm not going to hold through a summer bleed. And, the fact that MSOS saw this magnitude of a pullback, remember us talking about this rising wedge? I thought this rising wedge, and Joey posted about it on his Twitter this morning, I thought this rising wedge was going to get negated if we could get any kind of follow through. But here we are with this headline, and this bearish pattern is still shaping up. And so again, what you see this pattern do is something like this and then roll over into monthly consolidation. So CGC, let's start. Daily inside bar. Gave back a lot of the move. How much of the move did we get back? A lot of it. Let's say, including after hours, we gave back maybe 65%. From regular trading hours, we gave back, how is that the same measurement? Should be different. Anyways, looks like 65. Yeah, 70, 65. Anyways, just estimating. A lot. What bulls need to see is the hourly bounce that started to take shape into the end of the day. And bears were just you got to just tip your hat when you see the bears just doing a great job of keeping full control. Could see that this 5-minute uptrend had zero follow through. Talked about a 15-minute bear flag. 37, 1139, little double top, roll over to fresh lows. Just reject. New lows, no follow through. So we finally got a bit of a move into the end of the day on all the FOMC volatility, but bulls need to head back 12 plus if this is going to be a 4-hour equilibrium, because otherwise we're watching for the potential of a bear flag. And if we drop down and break 1021 and confirm an hourly bear flag, we're looking down at 813 as the next level. So bulls really want to hold 1021, or if it breaks, just have no follow through. And what that would look like is something like this. Monster candle, reject from the high, big bear day, break the low of that day with zero follow through into continuation. I'm not expecting that same thing to happen. I think there's too much bear volume on this move. I think that this move already happened is diminishing the move we're getting on this headline. Because again, consider this was all a short squeeze. And now, a bunch of the shorts had already been squozen at this point. So at this point, a bull is just hoping for a 4-hour tightening range. If we get some bull follow through tomorrow, we're going to look for a lower high and keep tightening up. If we don't get any bull follow through and can't get over 1160, it's an hourly bear flag. Simple statement. If we can't clear our 1160 tomorrow morning, it's an hourly bear flag. ACB, so just right back within range. Barely got over that 888 move with any kind of follow through. Again, same deal. Everything that I just said. Hourly bounce. Bulls must get over 752 tomorrow morning to try and shape up a 4-hour equilibrium where we will definitely anticipate a lower high as the most likely result of that bounce. If we cannot clear that level of 752, then it's an hourly bear flag. And we're then looking down to 615. And you better believe that bears are going to be looking for these lower highs on bounces because they know that retail is just about had it with this sector. TLRY, again, just filled the gap. Did we? 254. Missed filling it by a penny, but just not even breaking resistance, keeping the relative weakness compared to the peers. So MSOS, again, that red, we got the potential rising wedge. We got the red flag of the sideways trading yesterday. Big bear candle. Again, no bounce today. I mean, this was a bounce that lasted, what, a minute here? That just upper wick, that wasn't meaningful. I consider it an hourly stair-step drop, essentially. But we have a new resistance, 1001, 10 psychological, not surprising. But we got to see bulls get back over 10 to try and form this tightening range. Because if we drop down and break 948 tomorrow, again, we're just looking back to where we came from. After 948, I'm looking down at 876. And so, again, my mindset is taking profit and doing so on bounces. If missing the initial opportunity on the morning for remaining positions, my core position, which was MSOS and TCNF, my mindset was I'm going to hold this till we get DA news. And so now that I've gotten it, again, I'm not going to hold through the summer slow bleed. So I'm going to keep doing my in and out thing, but we'll keep an eye on the sector, of course. TCNF opened right at the high, gave back the majority of the move. No bounce whatsoever in any meaningful way. 1259 is a resistance level, followed by 1273. Must get over that level to try and tighten up. Pretty much if we don't have a solid green day tomorrow, despair will set in for sure. It also looks like the broader market is going to see another leg down. SPY, daily uptrend confirmed with no follow through. Weekly downtrend trying to confirm, just like it did back here. Have to keep that in mind. If the broader market, this FOMC reaction, bull move, give it all back, we'll see how we shake out over the next couple of days, but just be aware that broader market sentiment is going to have an impact here as well. Other one we looked at yesterday was AYRWF, just right off resistance, 345, 346, 345, very clear wall, and gave it all back. So we just keep tightening up on the weekly. Remember, we were watching this equilibrium. And now bulls must hold 210. If we break 210, that's a bear break of the equilibrium. So, hope it wasn't too painful. I know it was for many of you. Just lessons learned. The good news is there was at least a good bit of profit cushion from yesterday. So hopefully, the majority of people was just giving back gains from yesterday. That's obviously more ideal than having a fat loss. But it's the way it goes. And this is definitely a new one for me as far as gauging that headline better. Yeah, just lessons to be learned. That's the way it goes. No matter how many years you do it, no matter how successful you are overall, constantly going to be making mistakes and losing, and ideally progressing and learning from those mistakes and not repeating them. Feel free to ask any questions, and I hope you have a good Wednesday night.